Hello, everybody. Welcome to this episode of Derek Invest. I'm your host, Derek Miller. Hey, so what we're going to talk about today? Had some market action. We got to new highs. I think fourth consecutive positive day for the S&P. The Dow was up a couple hundred points. The Nasdaq was up as well. Talked a lot about structure yesterday. How the Nasdaq was leading the charge in the upward direction. As far as being the front runner in the indexes, and how the Dow was the last, was in the rear with the S&P in the center. And if we had gap ups in price, we need to make sure the Dow fills those gaps before we see the coast all clear. Something interesting today for all you guys out there that trade futures or indexes was at the opening of the day, the Nasdaq really took charge, and then slowly but surely. It hit its first bump, and the S&P took over. And then to finish out the day, ended up being the Dow taking over. I'm definitely someone right now that has bias towards the upside, not the downside at the moment. But what I just said to you, Nasdaq, S&P, and then Dow finished up the highest, and I'll jump onto some charts and show you that. That does show some shorter and more intermediate term weakness. The long-term weakness we talked about yesterday, we could see it, that the Dow is making new highs. The S&P barely touched its previous high, and the Nasdaq's way below its previous high. So in the big picture, in the macro picture, definitely we see weakness. And then now it's starting to creep into the smaller picture. So it's getting into some micro areas. Keep that in mind. For you guys, remember, we don't buck trends. We stay. The trend is your friend, right? Old silly saying, but I'm a dad. I can say whatever I want, right? I guess. I don't know. But let's take a look at some stocks today. Let's take a look at Apple, Amazon, NVDA, JP Morgan. We're going to look at Play, which is an interesting company. I had a student ask me about it, so I'm going to take a look at that. SMCI, Google. I just picked some stocks that I thought would be interesting to look at. As always, I never go through this stuff before I do these lives for you all. Thank you so much for joining me. I'm going to share my chart now. I can show you what I meant about the indexes and how it went. The day started with the Nasdaq leading the charge. Then the S&P took over. Finally, it was the Dow that took over. That'll be very brief. I talked a lot about that yesterday, so I don't really see a need to do that. S&P, where is it? Right here. Is this the... Let me make sure. There we go. Let's share that, huh? Okay. Actually, I wanted to share the other one. It's fine. Let's just share this. Here we go. So let's zoom out a little bit, just onto a 15-minute, I guess. So this is what I mean by the Nasdaq led the charge, and then the Dow, or then the S&P, and then the Dow. So as you can see, the Nasdaq comes screaming up. So we had a pull down this morning. Nasdaq comes screaming up, and look at the leg on that first run. You get a retracement, and then it finishes higher than where it left off. I mean, it was as high as up like 1.15%, finished up 0.98 bips, right? Almost a percent. So it went higher. But take a look at the S&P now. The S&P's initial leg isn't quite as much, but I would say the secondary leg is much, much higher. Much higher. It almost finished on the highs of the day. But then watch this. Now here's the Dow. So the Dow on that third leg, or the second leg up, outpaced both the S&P and the Nasdaq. So I trade futures during the day. So when I started off the day, I was tracking the Nasdaq, and I was looking for a couple of specific resistance points that I saw. And then after I saw the S&P break out, let's see what time it was. The S&P broke out. They broke at the same time, I believe, 12:45. When I saw the S&P, yep. Oh, no, 12:45. When I saw the S&P break to a new high, here's the previous high, break to a new high, but I noticed that the Nasdaq had not, look, same bar, it has not broke to a new high. Then I started tracking the S&P and looking for what could stand in its way, because it broke to a new high before the Nasdaq, which means it was going to lead the charge. Now, coming into the close of the day, Look at this. So now we come over to the Dow. So the Dow breaks to a new high at 1230. Come back to the S&P at 1230. It does not. So now I jumped on and I let the Dow lead me into the close. Anyway, that's enough about that. Let's take a look at our first position. I just wanted you to see what I meant. I wanted you to see visuals always help. So what you're always looking for is whoever is leading the charge, especially when you're in the equity world. And Russell 2000 would get included if it wasn't lagging so badly. But I don't have to look at the Russell right now. So let's come back over. Who do we want to look at first? Apple. Oh, I'm in the wrong spot. Yeah, let's take a look at Apple. All right, so here we are with Apple, and we're on our monthly chart. So we had that big dip last month, obviously August 5th. Let's zoom in a little bit and see what we see with Apple right now. Apple making new highs. Here's its previous high. The 5th of August did touch it. Nothing really to speak of from a volume standpoint, aside from that right there. This always makes me nervous, okay? When you come out, when you break out of a basing period, a range on high volume at a high price, and then the company sits, I get nervous. I am not a fan of this. Now, August 5th provides me personally with a lot more like security. It made me feel better because it came back down and it touched that previous resistance level, proving that it was now a support level. So below you, you're looking at 200. You're sitting at 222 now. So that definitely provides, or at least me, I like to know that that takes some risk off the table where it's just not a cliff down there. As you can see, there is a gap there, which there typically tends to be, right? Now, Apple is one of those companies that gaps tend to fill. I was talking about weakness in the market yesterday and at the beginning of this program, and I have to tell you, I see weakness in the market, and when I see gaps down here like that, that does in fact also make me nervous. That gap's way down to 175. You're $50 away right now. It's a big move. Let's zoom into 1 hour. How quickly will that move happen? Well, that's why we changed time frames. That's why we're now zooming in. The fact that what I see right now is run a 1 hour chart. There's down to what hit about 200 on the 5th. But we rallied through the gap. There was a gap up, which we have now filled, right? We have filled on this down move. That's a positive thing. Let's continue looking. So we're basing down here at lows. It looks like at the low prices, there is volume. Nothing insane, but you don't want to see anything insane. This is a 30-minute chart in the close today. Wow. A lot of volume on Apple in that close today. That's interesting. Let's keep zooming in. Let's see if we see where we think Apple should go. I mean, it looks like it has a very clear run to 225. That's only 1% above where it sits now. Outside of that, I mean, that's all I really see right now. No defined targets there, aside from the fact that that should prove to be some level of resistance at 225. But that's, it can blast through this as well. I mean, this is high 225.48. This will be the same. Yeah, 225.24. So, yeah, I guess there's some resistance here. You're only about 1% away from that now. So I don't know that I would be all that concerned about it. Let's take a look at Amazon. Oh, that looks nice. That looks quite a bit different. Amazon fills its gaps too. See this gap down here? This was on the 10th, and then it filled yesterday, the 11th, and off to the races we went, 180 to 186. I mean, that's not bad. It's not bad at all. Let's zoom out. Let's see if there's anything else to see there. Let me go out a daily. We've been watching Amazon quite closely on this program. Here's that gap filled. Here's a gap down, filled, gap up, filled, and now you're running. So your next real resistance on Amazon looks like it's about 200. Let's zoom in a little bit and see if there aren't some gaps or some targets that we can be aware of for all you short-term and intermediate-term trading types. Let's see. 30 minutes. No, see, gap up filled. There's a little gap down here, but it really played in this range for a long time. And remember, if you're employing gap theory, the least reliable gaps are found on individual securities. The most reliable gaps are found on indexes. And this gap has a lot of price moving through it. So it does exist here. But again, I wouldn't use that as a target. This it gapped up here. It filled. Yeah, I wouldn't use that as a target. That's not going to be a reliable target. That's just 25 years of experience speaking. That is not going to be a reliable target. You had a high. We came in, bounced. Yeah, it looks good. I mean, it really looks like it's a run to 200. What could possibly be standing in your way? Let's go take a look. 4 hours. What could be standing in your way? Probably somewhere right around here, 192, 250. You have some resistance. Again, this is not a reliable price. You're gonna run into some resistance, but I would say that it should bang through there. Amazon should cruise. I mean, I wouldn't foresee that being a huge issue. Google, oof, that looks a little different, doesn't it? That looks a little different. That is quite ugly. Let me back that up. It's retesting that breakout. Retest. I mean, the high of 2021, by the way. The breakout's up here. So it's retesting the breakout, which, hey, I love retests of breakouts. And I certainly love when on a weekly chart, it is bouncing like a rubber ball. That's positive, I would say. We have a very large gap up here, which I like. But if you see behind it just 2 days, price runs through the gap. Those of you who don't know gap theory, that's one of the things I teach my one-on-one students. It's very important. And because this has price running through it, it is not a reliable gap, although this is probably a 50-50 scenario right here to 184. That's probably a solid 50-50 scenario. But it looks like as we zoom in, there's a gap up today, and that is going to come first. Yeah, there's that price filled. That is not a reliable gap. 50-50. 50-50. You'll notice if you watch me enough, sometimes I'll take a gap and I'll go, there's your target. And I mean it. There is your target. And then sometimes you'll see me ignore them and you probably wonder why. The reason is how it's formed. When price runs through it, like up here. So this is what, the 29th, and this is the 30th. So the 29th price runs all the way through. On the 30th, you get a nice run. And you can say, oh, that's a gap down. No, not really. And this is an individual security. So you don't want to live and die by that, believe me. You'll live and die. It'll be a 50-50 split. It'll help you as many times it'll hurt you. High 152.47, and you're 155.47. You're looking at 3 points. So a percent. You have a percent below you, it looks like, that would need to be returned to for Google. Yeah, it's right there. Is Google a great buy anyway? For all the people in the back? No, it's not. It's making lower lows in this market. So there's Google. And there's the NASDAQ. That is a weak position inside the weaker of the three indexes. Still the leading index in the bull market, but the weaker of the three indexes in this correction. And so we can't determine whether or not the NASDAQ is going to lead us into a good spot or a bad spot until it breaks this high. Ultimately breaks this high. Once it breaks this high, then it should begin to lead the S&P and the Dow into breaking the next high, which is over here. At that point, we'll know whether we're in a bull or this could be a pretty significant bear. As of now, anybody saying that they know, I can't imagine how they're doing that. I certainly am not going to say that. I certainly don't know. But once again, as far as Google goes, is this something you're going to buy? I don't see why you would. I certainly wouldn't. Let's take a look at JP Morgan. I'm a big fan of JP Morgan. Let's see. Nice solid move down. JP Morgan, and I've been talking about them for a while. I think it was just when they broke out of here. It was somewhere around 174, 178. You can go back and take a look if you want. I said the financial to own was JP Morgan. They hold the strength. They don't hear talking about, and when I analysts, like I think I think it was JP Morgan and Morgan Stanley that had a couple of pretty serious bears. And the Morgan Stanley guy bailed, I believe, and then I don't know if the JP Morgan guy has or not, but anyway, it seems like the news that I read that comes from them and probably Goldman Sachs as well is always really fair. It seems very even-handed. It doesn't feel like I see a lot of things that are looking to mislead, and so I like that. And the stock charts speak for themselves. So here's JP Morgan. What does it look like right now? Well, it had that big move down yesterday off of a high. So you're automatically thinking, if you know any better, you're automatically thinking, oh, they want to pick up more shares. And when I say they, I mean institutional traders, desks, those guys. They want to pick up more shares because to come off a high price like that, what did this run? This ran from 218 to 200 to fall 9% and be JP Morgan. And now you're rallied back to 207 the following day. If this was all selling, JP Morgan would be sitting at 150 today, 160 today. And it's not. It's sitting at 207. It has a high of almost 209. I think I saw midday. Yeah, 209. So look, I would say that this is an effort to buy more of the shares. Were they all purchased all at one time? Typically, no, that's not the way it works. The institutional desk would bring price back down to 200 as long as there wasn't a lot of volume there. If there wasn't a lot of volume there, an insignificant amount of volume there, they would say, hey, we probably collected as much of the shares of JP Morgan as we possibly can from the weaker hands, the less knowledgeable hands, the retail traders. Let's run this thing. And now they control as much supply as they believe is necessary to run to new highs. That would be my assumption right away. And that is what I would expect from this particular position. I can zoom in and see if there's any direct price targets created in the last couple of days. I don't jump in and start swinging at these. I told you how I play them. I would wait for price to come back down, and then I would see what I felt about the volume. Does it look substantial compared to the drop? Does it look unsubstantial? Does it look minimal? Minimal is what I would be looking for. Otherwise, it may fall a little lower to capture a bit more supply before it's run up. So you want to be aware of that fact. Let's see. Let's take a look at play. One of my students asked me about this, and this was an occurrence from yesterday as well. I remember when I looked at it yesterday. It's funny, the price is 31.57. I thought if it could close around 31.57, the thing might be okay. Let's see if we can't. So you can see the volume as high as ever down at this price. And it has been before as well. It looks like, oh, that's at a high price. Go to a weekly and expand this a little bit. I haven't looked at this in a very long time. And I had a student ask me about it, so I want to have an honest opinion here. And the truth is, I don't think I'm going to be able to have an honest opinion until I see how this closes out the week. I mean, I don't want to give an opinion I don't hold. I would have to wait for this to close out the week. I mean, right now, as you can see, the volume was so high, and it's been this high before. Now there is actually an actual gap there. It's been this high before, and it's been this high at that base, at that same price, and I like that. And prices bounced. I mean, it came down to just about 29.50, I think, and it's bounced to 31.50, so it's halfway rebound. Yeah, I would just have to see how this closes the week. I'm not even going to continue. I need to know how it closes tomorrow to even have an actual opinion because, it's really genuinely tough to say. It's tough to say what that will do. Let's see. What else did I say? Let's look at NVIDIA. NVIDIA. Let's see. It's running. Okay, so it's running. It's running with the Nasdaq. Gaps filled down here. Everybody knows how much I love that. Let's see if there's any targets in there that we can look at the moment. Boom, boom. No. Okay, well, this gap filled today. That would have been an essential point to look at, and I believe I had pointed this out before. Let's take a look here. So it looks like it's just the highs are in play, 130. Looks like 130 is in play. It looks like a clean chart. All the gaps have filled. There's another one up here. So you're probably on a run to 125, then 130. Let's see if I see anything on a 5. See, all the gaps are filling because there's so much institutional participation. That's something to remember, everybody. When you're trading these individual positions, if you're choosing positions that are part of most institutional desks or most big firms funds, something like NVIDIA, for example, you're going to see a very clean chart, even with the individual security, because there's so much participation. So, NVIDIA, I mean, look, you're 120. You're looking at a 125. You'll have a little resistance. A run to 130 is what it looks like to me. I have not looked at any semiconductors lately. Let's see what SMCI looks like. Oh, here's a nice gap up at 516. I believe I had SMCI for a 445 target recently. Is that this? I might be wrong. It might be something else that just plays in this price range. Let me zoom in. Oh, 545. Yeah. It's taking forever, huh? Taking its good old time. It'll go. There was a gap down that did finally fill. So, yeah, you're looking up here, 545. This remains unchanged. Anything below us we need to be concerned about? Gap down filled. Gap down filled. Gap up filled. Pretty clean. What else should we look at, everybody? Want to see what Meta looks like? Oh, I do believe I see a price target. So Meta. Got one. It's the 12th, right? Call it 513. We're on a 5-minute. Say Tuesday. 17. All right. There we go. We found a target. Beautiful. All right, I'm going to stop sharing here and then just talk a little bit about what I think we'll see coming tomorrow. Where are we here? Ba, 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 ba. Oh, good. Just in time. 25 minutes in. So what do we see coming for tomorrow? Well, I think we see the closeout to a good week. Dow probably breaks new highs. That'd be an amazing headline for the weekend. And also, it looks as though that's what we're building for. It looks like we're building into new highs on the S&P and the Dow. The S&P will have some resistance. I think it makes it anyway tomorrow. The Dow should make it. It remains to be seen what happens with the NASDAQ. I think, and I've gone over this several times and covered it several times about my opinion on the markets in general. So I think that is what we're aiming for is high prices. I think that is what all the steep and very swift drops have been about. Gather supply, yank it from the weaker hands and less knowledgeable hands that have knee-jerk reactions to a percent move down, which can be very painful. Like if they're that quick. But for people that know what they're doing, you don't pull off high prices like that, and it keeps running unless it's a serious global economic event like 08 and 09, and we have nothing like that going on. So you shouldn't be trading based on a fear like that. All right, listen, everybody. Remember, if you're not good up here, you're not good anywhere. Get outside, take a walk, smile, fake it till you make it, grin like an idiot. You're batting 1,000. You've never missed yet. You have beat life every time it's challenged you. How do I know that? You are still here, right? Thank you all so much for joining me. I enjoy doing these. If you have any questions, please reach out. Other than that, thank you so much for joining me. And remember that every day above ground's a good day. And I'll see you all